Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis on the Bitcoin chart as it is in danger of a deeper sell-off than we are already experiencing. So, without delay, let's get right to the charts. And we will start over here on the 1 week candles, and in reality this weekly candle is selling off pretty deep, and it should be no surprise for those of you who watched the video I made a couple days ago at the beginning of the week. This candle was actually already starting to sell off, and I had mentioned the previous two candles were indicating a bearish pattern. Now, if you missed that video, you might want to shoot that subscribe button so you're not caught off guard when Bitcoin's price action makes big moves. So now the question is, where does Bitcoin head from here? And right now, we're looking at a very bearish market as we continue to sell off from the all-time high. So, as long as the bulls fail to step up and try to prevent the bears from pushing this price down, we could more than likely be headed back down to the lows that we saw in the summer of 2021. And that would put us somewhere around the 30,000 level. And if we just take a look at this white line, that is going to represent the 100-day moving average, the EMA moving average. And that puts us right around 31,000. And maybe you could expand this zone down to, say, the 30,000 or the 28.8 level, which was the low of that sell-off last summer. And with that being said, we can jump over here to the Bitcoin options expiration date of next Friday. That would be January 28th. And we can actually see there's going to be a pretty good battle right here around the 40,000 price level. That is really going to be a level that both the bears and the bulls have a major interest in. However, if you look back a little further at the 38,000 strike price, we can see some pretty good motivation to get to that level as well. However, with this week wrapping up and next week coming into play, which is going to be the end of the month expiration for these options on January 28th, I would expect some pretty high volatility between the 38,000 and the 40,000 level as the bears and the bulls battle this out. Now, if the bulls actually decide to join this battle, it would be in their best interest to push this price higher, so we might move that volatility level from 38,000 to 40,000 up to perhaps that 42,000 strike price range. But lately, I have not seen any motivation out of the bulls to actually join this fight. And so jumping back over here to the weekly chart for Bitcoin, we can see after breaking down below the EMA ribbons, the bulls did try to step up and push the price back into the ribbons. However, they failed, and we have since then rolled over on this weekly candle. Now, if we look back and check our 6 back into the summer sell-off, we saw a similar pattern develop where the bears were able to push the price down below the EMA ribbons. However, the bulls stepped up, pushed the price back up into the EMA ribbons, and then continued a bullish run. The big difference is now we did not see that push on last week's candle up into the ribbons, and the bears took back control and are now pushing this price down. And if I add in some Fibonacci and support resistance levels, in my previous video I had mentioned if the bears got the price below 39.6, then we were more than likely in for a longer sell-off, and the bulls were really in danger of any possibility of extending the current bull run. But there's a couple days left in the week, and what the bulls need to focus on really is to get this price back above, first of all, 39.6. After that, they need to get the price above the 786 level on the Fibonacci, which has been previous resistance turned into support. Now they need to get this price back above there, and that's around 40,600. And really, if they fail to get the price back into the EMA ribbons, which is going to be around 44,000, the bears will maintain control of this battlefield, and they're targeting around the 31,000 to, say, 28.8. That would be a pretty big sell-off, and there's going to be a lot of pain, but there still will be a lot of opportunities. And with that being said, I am going to try to do some live trading videos that I record to show you how I actually take advantage of these opportunities. It's on the short side, so some of you might not have the stomach to short Bitcoin. I totally get it. If you don't have the stomach for it, don't do it. Wait until things reverse back into a bullish pattern, and then you can take advantage of those opportunities. And it's really not a top secret strategy. It's kind of off of what I show you in these videos. I say this looks bearish. Therefore, this week, once we broke this 39.6 level yesterday, I opened up a short and took advantage of that. And I closed it out after a pretty nice gain. However, I'm not trading on a weekly chart. I'm trading on a much lower time frame. And again, I will try to show you some videos on how I'm actually doing that. So with that all being said, again, the bulls need to get this price back above 39.6 and more importantly, probably above 41,000 to have any hopes of gaining any footing in this market. But right now, I think the bears are going to focus on getting this price below 38,000 in order to take advantage of the end of the month expiration on those options. So I think that pretty much wraps it up. I just wanted to do a quick video since we did break down through the support level of 39.6, and I said I would jump on and do an update video if we broke support or resistance. And since we broke that support level, I thought it was important to do an update, and I will continue to do update videos in the future. So again, now would be a good time to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.